Hey guys, welcome. It is 1 p.m. on March 26th. We just got the closing bell, and it was mostly an extremely boring day. Like we said, that most likely we're not going to get a lot of range today or a lot of movement today, and that proved to be really, really true until the last half hour. Then we started to get some directionality. But even so, let's take a look at our charts here. Even so, we did not get quite down to that EMA 8. What we said earlier this morning was that we are very unlikely to move up beyond or challenge the all-time high over here, and we are unlikely to move beyond the EMA 8, and that proved to be true. But really, this downward movement really only happened in the last half hour of the market. You can see that we were trading very, very flat throughout the day, and then suddenly at 12:30, we started to go way lower. Now 12:30 is when institutional buyers or sellers like to become active, position themselves for the next day. So the flurry of activity that we tend to get at the end of the day, you see this rising volume, tends to be for the institutional traders. And at the beginning of the day, let me see if I can capture the whole day here. The initial volume tends to be for retail traders. So if I look over here, same thing. There's volume, heightened volume at the beginning and heightened volume at the end. And you can see that the volume at the end is larger than the volume at the beginning because there's more money being played around with over here. That's the institutional guys. So today, the institutional guys, they waited for the last half hour and suddenly our market started to move lower. Now, this is not unexpected. This is not anything for us to be concerned about because what did we say? We said we hit that all-time high, and then we are probably going to pull back to the EMA 8 or below it, in between, somewhere in between the EMA 8 and the EMA 20. So far that is playing out. It's just playing out kind of slowly because we have low volume. We had low volume yesterday. We had low volume today. We have by the close of yesterday, we were only at 32 million. We got another 10 million within half an hour. And then overnight, the updated numbers that got calculated and reported bumped it up another 5 million or so. So that's probably going to happen again today. So the difference between today and yesterday was only 8 million. So if we pop up to say 56 million by tomorrow, that's still pretty far under the average volume at 72 million. So very muted. Wednesday, tomorrow, we're expecting it to be even more quiet because we're waiting for the GDP report on Thursday. So really, we're just going to be locked in this range. So everything we said this morning and over the weekend, how we expected it to be quiet and not really give us a lot of directionality, just more chopping sideways, that is all starting to play out, which means it's hard to get into positions right now unless you're looking at a longer term, 1 month or longer term. So our portfolios, that's definitely what we're doing. We're looking for a longer term with these short term trades, unless they're 1 or 2 day pop-ups, they're going to be difficult to trade and find. So for example, you could have said, hey, well, if we went for short for a couple days here, we could have done pretty well. And that is true. But what happened when we were up here? Thursday, Friday, we said it was extremely difficult to find weak stocks because every single stock was green. We hit an all-time high, and when we looked at that, the momentum map, everything was solid green, and it was just really hard to pick out what was going to move lower. And I would say impossible. So if you just had to guess, you would have had to take a wild stab in the dark, and that is a gamble and not an investment. And so we did not participate in this downward movement for exactly that reason, because we didn't want to gamble. We wanted to make good, strong, solid investments that had the expectancy in our favor. So we were able to take advantage of this, and we don't expect this to drop much lower or move much higher before the end of the week. So we're really just waiting for Monday. So this might be a pretty short video. So we'll take a look at the rest of what happened today. One thing that we wanted to take a look at, I didn't mention this morning, was SMH. SMH, what was happening was we got that huge engulfing candle, and we said that that could be the peak. We had this strong volume bar, this strong price bar, the strongest one we've had in I think it was a couple years. And this volume bar, strongest one we've had in also about a year or so. So stronger than this one even. That was October of 2022. So about a year and a half ago. And so to find one that matches that volume bar, we actually have to go all the way over here to March of 2022. So 2 years. So this is the strongest signal we've had in 2 years. And that was signaling a potential top. We came down, bounced off of the EMA 20 and bounced off of it, but didn't go significantly higher. We just kind of faded over the last few days. So even if this challenges that high right there, it'll be very important to see if it can break out of it. Otherwise, this will be a double top, and then we're most likely headed lower. So if we look at the QQQ traded down to its EMA 8, just like the S&P. It just looks weaker because it never made it out of its sideways trading box. So this continues to trade sideways in this box, and we're just really are in a consolidation period for the QQQ. And for the Dow Jones, what we wanted to see was a quick bounce off of this box right here. So far, we're just sitting on top of it. And from this morning, what our analysis was, it's kind of unlikely we're going to get that quick bounce up. So if we just chop sideways, that's not great. And if we enter back into the box, that's definitely not great. And the chances of us chopping sideways this week are pretty high. So we don't have too much hopes that this is going to go higher. We have to be very, very careful because this could be a topping pattern, or at least a consolidation, a movement into consolidation. A few days ago, I showed you guys, do I have it saved? Is it this one? It might be this one. Yeah. The new way that I was drawing these trend lines, or looking at these trend lines, I should say. So the Dow Jones already chopped sideways through its downward trend line. And again, that doesn't mean that we have to drop down, that we have to pull back. We could just consolidate for a while until we're ready to pick a direction. And over here, our moving averages still haven't quite converged yet, so it could continue to chop sideways for a bit. The QQQ starting to chop sideways, we had convergence of our EMA 8 and EMA 20. The MA 50 is getting pretty close. And if we stay within this box, that MA 50 is going to go right up there pretty soon and join in the party, the sideways chop party. And if that happens, then it'll be interesting trading, because then you really have to be good at picking stocks. Because if the overall indices are going sideways, there's not that many that are going to break from correlation with the overall index and actually trend. So if the index is chopping and you have an individual stock that is trending, then that is a break of correlation. And remember that stocks tend to have roughly 70% to 80% correlation with both the index and with their sector. So we would need to see an exceptionally strong stock in order to break free from its sector or the index, or exceptionally weak stock to break below. The exception would be if we have a sector that's being focused on, because the sector could break free of the index, and that would make it better or easier for a stock to break free of the index. So we want to start paying attention to that sector rotation very carefully. Only right now, it's just kept on rotating. So we just keep rolling from one to the next, to the next, to the next. We are not seeing any staying power or any money that is staying consistently in any one sector, except for SMH and XLC for the past year. But we are starting to see the potential for it to chop sideways. So I could draw a box right here. A chop sideways. So if this continues, then we're finding strong and weak sectors and finding strong stocks and weak stocks is going to be very, very important if we want to make money by being directional, meaning that if we buy a stock or short a stock, or if we buy a call or we buy a put, we're going to need the directionality. We're going to need strong price movement. It may not be the case if we're doing spreads, but we don't do that many spreads. We like to keep it a little bit more simple. So, well, our stock picking skills are going to come into play pretty soon here. Actually, they're already starting to come into play. So let's see what sectors did today. I'll look at this first, see if there's any clear standouts. We had real estate, utilities. These are the same energy, same as this morning. Look at this. Utilities, 200-day moving average. So there was some weakness. So obviously 5-day, 10%. So there was some obvious weakness in the utilities the past few days that dragged the majority of utility stocks below their MA 200, which is interesting, which means that the MA 200 probably just went over 50% somewhat recently. And this downward movement was sharp enough to pull it down. So everything was starting to become bullish, and now we're dragging it back down. Let's take a look at XLU. Yeah, so we just passed the MA 200, came back and bounced, and now we got a strong bar today downwards, and we might be re-challenging that MA 200. So failed breakout, bounce, and then, breakout, pullback, bounce, and then that bounce might be failing. So we have to be careful with utilities. That's why I didn't like it too much this morning when we looked at it. The only one I thought what might be okay was XLE. Let's see how XLE did. Energies. Okay, still on a longer term basis, still doing very well, but on the 5-day, breaking down a little bit. So we're really starting to see weakness in the short term. And it's going to be hard to find good bullish opportunities, but we may be able to find very good bearish opportunities. So let's take a look at that. Well, let's take a look at our stock fetcher screen first. Look at our sectors that way. So 90 sectors, there we go. On a longer term basis, a little bit fragmented. We got the E way down here between UP, so that's fragmented. Y way down here, separated from XLC and XLK. Retail's up here with them, that's good, but XLY way down here, that's a little strange. XLV and XLRE are, I guess, close enough together. And V and I are close together. And then F hanging out right here. Yeah, so fragmented. I would still call that fragmented. And if we look on today, let's see what today. Retail did well today. Bonds did well today. Gold, healthcare. So conservative stuff, except for retail. That's the outlier. Conservative. So we still have fragmentation even on a 1-day basis. We have retail together with healthcare. That doesn't make a lot of sense. Then we've got consumer discretionary and XLP right next to each other. That doesn't make a whole lot of sense. So we're kind of all over the place. All we can say for certain is that we had a little bit of a pullback in XLE and energies and utilities and tech. So the ones that were leading, or actually the technology sector, which was leading, is now starting to lag, which is not great news for continued upward momentum. It means that if we're going to continue moving higher, then we might be carried by the medium risk to low risk sectors, and those will not be able to give us a huge momentum upwards. They might give us mild momentum upwards or just sideways choppiness. So XLE, not a big deal. So it's not a big deal that XLE, yes, it showed up at the bottom of our stack in terms of sectors, but all it did was start to pull back towards that EMA 8. And it's still kind of far above the EMA. I mean, not super far above the EMA 8, but it is not that much, further away. Or it's still, if I look at the bottoms, like the lows of all these candles, the low is is pretty much the same as all of these. And so at least since we separated right here. So as all of these, so there's really nothing to worry about. So if you have some positions in XL, then you're doing okay. And I did mention this morning that we probably should wait till we had a little bit of a pullback before we went into XLE. Let's look at PSX. I'm curious what happened there. So yeah, we just chopped sideways in PSX. We didn't really lose much in that. It actually went up 0.09% and just stayed there on the EMA 8. So that was the one we looked at this morning. So, I would say XLE would be still my favorite sector to the long side. I wouldn't really be looking at anything else at this moment. But again, this week, given on how it's trading so far, the low volume of the last 2 days, and the limited range, especially intraday, is crazy how quiet it was today. If we only look at this, if we ignore 1230 and after, and we look at this range, that's not even one point, 520.5 to 521.5. Let's just call it 5. Let's call it 1 point. That's crazy. Like if we look here, 519.75, 520.94. So that was 1.2 yesterday. And then if we look on Friday, 521.2, 522.5. So about 1.2, 1.3 again. But that is not, ever since we hit this all-time high, our range of movement has been very low. Look at this one. This was 515 all the way to 520. So that's 5 points. 511 to 516, another 5 points. 515 and a half down to 512 and a half, 3 points. Right now, the last few sessions, we've been dealing with 1 point movement. Well, the exception is after 1230, we did get more movement and more direction over here. So this one probably more like 2, 5.18 to almost 3, 2.8 after that last half hour. So maybe we get a little bit more movement and volatility tomorrow morning, but unlikely because, again, that GDP report coming on Thursday. What that means is there is probably some pent-up action building up this week. We're not moving anywhere, but we're waiting for that GDP report. We're waiting for senior traders to get back to their desks. And then Monday, Tuesday, we might see the release of that pent-up energy because this is abnormally flat since the all-time high, since last Thursday, even, not just this week. So keep your powder dry. That's the theme. Sit on your hands. Don't get trigger happy. If you must trade a very small size. Keep the majority of your capital for next week because we're probably just not going to see any action or any movement. And by Thursday, after the GDP report, we should be able to have some idea of what sector might be stronger or weaker going into next week. Hopefully we get some volatility on Thursday and some separation of those sectors so that we can plan and position ourselves for the next week. All right, I think that is pretty much it. There's not that much more for us to look at. We are starting to creep up on the next round of earnings seasons. So if we look at some financial stocks, we can see that they're coming up, April 15th or 12th, April 12th. We look at Bank of America, April. Okay, so mid-April, we're starting to get financial institutes report. For the couple weeks, though, before that, between now and then, earnings aren't going to be that important. But just knowing that earnings are coming up in a couple weeks helps us prepare for the volatility that could be introduced into markets at that particular time. And then some of our earnings trades, some of our earnings strategies start 2 to 3 weeks before earnings actually happen. So we can start planning some potential earnings trades and start preparing right now. So might as well, when the market is quiet, during a quiet week, we might as well start preparing for earnings season that's coming up in a couple of weeks. So I might look at that tomorrow. So that's going to be it for today. We'll see each other tomorrow morning at the pre-market session. Have a wonderful day, guys, and I'll see you in the morning.